Hello, welcome back. I hope you're doing well and I hope that you're staying cool. If you're new here, I am Jessica Abella. I am a tax advisor and small business advisor here in the greater Seattle area. And today we're going to chat about IRS letters, everybody's favorite topic. The IRS sends out millions of letters every year. Some are scarier than others. So we're just going to take a quick look at 3 of the letters that we see most frequently in our practice. So let's start with just the anatomy of an IRS letter, first of all. They should look something like this. They always have the return address of the service center that is reaching out to you. But up in the upper right-hand corner, the most important thing to note is what notice this is. So this one is a CP 2000, which means nothing to most people, but a tax advisor knows what this means. So a CP 2000 letter is a letter that basically says that the IRS computers had some information that was missing from or different from the tax return that you filed. The most common example is when perhaps you had interest income from BECU that you didn't get into your tax return, but the IRS, of course, received that 1099. And if it's enough of a missing amount, this letter gets automatically kicked out by the IRS computers. So the letter continues to go on to say, this is how much the IRS thinks that you owe based on this change, and it will continue on to show what exactly it is that the IRS thinks that was omitted from your filing. So in this explanation of changes section, it shows that this particular fake taxpayer was missing some 1099s from Fidelity. If you agree, you can pay the tax, and that's that. If you don't agree, there is a process for responding to the IRS with the information in the letter, and respond with the letter and any other additional information that may be needed. The IRS is not always right. They certainly don't recalculate this in your favor, so it is always worth taking that information that was missing, drafting an amended tax return, not necessarily to send to the IRS, but just to verify that that adding that additional bit of income or making that change to your tax return impacts everything in the way that the IRS calculated it. So that's the CP 2000 letter. The next most common one that we see is this CP 501, which is just saying you owe the IRS. So you filed your tax return and there is a balance due. So the IRS is just letting you know, hey, there's this open balance on your account. Is this always right? No. There are a couple of things to note that are important with these letters. First of all, these letters are often printed a week before they are actually mailed, at least a week. So if you have recently made a payment for that amount, it is very possible that this letter went out before the IRS computers caught up to the payment that you made. So if you've recently made a payment, you know you just paid this, you're fine to just ignore this letter until the next one comes. If another one comes after that, the IRS didn't post your payment correctly. Which brings me to the second point on this letter, that if you have made a payment and there was plenty of time for the IRS to post it correctly, then there is additional investigation that needs to be done in order to track down where that payment went. The most common thing that we see happen is a married filing joint couple. The spouse, the one listed second, may have made that payment with their own social security number, and the IRS may not have matched that up to the joint filing. They should have. Sometimes it happens, so just something to be aware of. The third letter that we see often is in a similar vein. This one is saying that there is a discrepancy between your estimated payments that you actually made and the estimated payments that you reflected on your tax return. This one, again, the most common thing that we see happen is payments getting posted to the secondary taxpayer, the spouse, and the IRS not matching that up to the joint account. So still the best practice for the primary taxpayer's Social Security number to be used for making those estimated tax payments, even if it's for the spouse's Schedule C business. The other thing that we see happen often that gets caught up in these letters is when a payment is coded to the wrong year. Either you mailed in a check and the IRS misposted it to the wrong year, or you went online to schedule that payment online and mistakenly chose the wrong year. Perhaps it was an estimated payment for 2023 that you made in January of 2024, and perhaps 2024 got marked. Shouldn't happen, but it does happen occasionally. So the best thing to do is to check your transcripts with irs.gov and to check your bank records to make sure that the payment that you thought that you made did clear. If you mailed in a check and you don't see it on your account, get a copy of that check of both sides from the bank. There's a tracing number on the back of that check that the IRS needs to help track down that payment. If you made the payment electronically, you'd want to go back to that confirmation if you can. If you don't still have it, again, going through your account to try to see what year maybe that payment got connected to is the way to go with that. Often those kinds of things can be resolved with a phone call to the IRS. You may need access to a fax machine at the same time though, or an online e-fax service in order to provide the IRS additional information while you're on the phone. They are getting better about being able to accept information electronically through irs.gov, so make sure that you have an account with irs.gov if you don't already. The one last thing that we have seen on some of these payment mismatch letters is occasionally when you make an extension payment, we see it posted as an estimated tax payment, or it was put in as an estimated payment, but it was actually an extension payment. Usually those letters come in saying that you don't owe anything extra. The IRS is just making a semantic change to what kind of a payment that was. It's not a big deal. So that's just a brief rundown of the 3 most common letters that we see. As always, we would recommend if you receive an IRS letter and you're working with a tax professional, especially if you're working with our office, get a copy of the letter to the tax professional, all pages, not just the first one, so that we can help identify if the IRS is correct or if a response may be needed. But don't be afraid of the IRS. They really just want communication back. So don't ignore the letters. The more letters go on, the more trouble will come. So did I miss anything? Do you have any questions? Definitely let me know. Or if you have any suggestions for future topics, I would love to hear those. I hope you have a wonderful rest of your day, and I should see you back next week.